Welcome back to Mutual Fund Café Outlook 2018. 2018 could well be a seminal year for India, for the Indian economy and the Indian financial markets. The NDA government has spent the first 3.5 years in office taking some really tough calls, whether it is Aadhaar, whether it is Jan Dhan, linking Aadhaar and Jan Dhan and direct benefit transfer, or whether it is GST and the inordinate amount of effort that has been put into it. All these could well come into maturity in the year 2018. It's also the last full year of effort for the NDA government, and it could put its best into political economy, policy making and policy implementation. We have been speaking with 4 star fund managers, S. Naren, Navneet Munot, Munish Gunwani and Nilesh Shah. They had between them 9 lakh crore of fund money. We've been asking them what is the best way or what are the best trends that investors can chase. Well, Naren, considering that this is the year when the government will put everything it has to ensure that the economy fires, is it a good idea to look at economy-facing stocks now, infrastructure, capital goods, corporate banks?
Certainly, I think the trend, if you notice, from October has changed. And if you see the rally in some of the construction stocks and some of the rural-oriented stocks, they've been phenomenal actually. So I think the trend is certainly changing. In any case, you had a long boom of quality. So clearly the trend change is noticed, and I think it will last for some period of time. That's how we look at it at this point of time.
Okay, Nilesh, same question to you. We've seen the last bit of rally being driven by names like Larsen. Also, a lot of mid-caps like NCC, HCC, they have started to do well. Is the market now betting on balance sheet repairing as well, and some of these companies getting large orders and executing them well? Do you think that could be the theme to work on?
So as Naren mentioned, typically ahead of election, government will focus on inflating economy. They will work on infrastructure projects to inflate economy. And my guess is that this time there will be focus on rural economy as well. So combination of infrastructure and rural and agriculture related theme can be played out for election. But within that, one caveat is that today many a times when a sector runs, the leader and the laggards both gets run up, especially in a momentum market. So please put money with quality, with leaders rather than laggards. There are many stocks where equity value is written down by virtue of debt burden, yet the stock market is giving them higher valuation. They'll probably get surprised by the equity write-downs.
Navneet, related question would be the way in which commodity stocks have done, metals in particular. Will 2018 be the peak off year, or do, as all cycles, the metal cycle also likely to overshoot, and therefore 2018 good for metals?
So two views. I think that the world is in a synchronized growth momentum. I also think that the Trump, people were worried about the trade war and currency war, but he's actually started a tax rate war. So 35 to 20% may have to be followed in some or the other form by most of the other countries. The protectionism will lead to globalization of what I call localization. So investment cycle globally from a capex perspective is likely to revive, which will also benefit India. Also think that globally defense spending is likely to go up because of the rising geopolitical risk, so that will benefit. So I think some of those sectors from the Indian perspective also can benefit. So whether it's the construction, capital goods, engineering, all of them are going to be a beneficiary of that. From the metals perspective, whether this will also drive the metal prices the way they did in last cycle, I think we may not see the similar kind of momentum in the metal prices. I think that China's growth, because China was the main commodity guzzler and which drove the, whether it's aluminium or copper or zinc, this time the growth of China is going to be led by a lot more in the consumption side than the infrastructure side. So we may not see the same kind of metal rally as we saw in the last cycle.
Okay, that's interesting. And Manish, I just want to extend that point. How big is China going to be as a factor for our market? We've seen this year, for example, a lot of sectors have done well because there have been issues with China. Chemicals has been one example. Select commodities have been another example. Your thoughts on what's happening in China and if that will have any bearing on India?
I think it's going to be very important because, as you mentioned, we could be in the nascent phase of a multi-year trend in terms of shift of manufacturing from China to India. So while we've seen a lot of stocks do well, but if you see a lot of these stocks on a market cap basis, they are very, very small. In fact, if you look at Nifty or BSE 100, you struggle to find manufacturing companies in the top 100, 150 companies. So I do think it's a big trend which is worthy following, that because if you see over last 5 years, every item has moved in favor of India, whether it's currency, power cost, environmental compliance cost, labor cost, and also I think in a lot of segments, you have a domestic market which is of reasonable size now. So what is happening, we are seeing is in a lot of segments you have a domestic manufacturer who's reached a size which is globally competitive, and then suddenly China withdraws from that market. I think there's a huge roadmap for these guys to grow from there. So I think that's a very interesting trend to follow.
Okay. But you know, speaking of commodities and the fact that you know, already the Monetary Policy Committee's minutes sounded quite hawkish. Nilesh, what would you advise in terms of the allocation of funds between debt and equity? Do you think now debt will get pricier and therefore some money put there?
So on the debt side, we believe today there is a sweet spot for mutual fund industry in terms of lending to those sectors where banks are not there. Loan against shares, land acquisition, acquisition financing. Now these are the opportunities which we are capturing in credit opportunity funds. They have, you know, short-term investment horizon. They have short durations to medium durations. They are not really long like a bond fund or a gilt fund. Second, the carry on coupon is pretty good. So in the fixed income space, I'll recommend people to allocate towards credit opportunity funds. And if the corporate profitability is coming back, then these funds will have a limited credit event. Not that they are as safe as a gilt fund or a bond fund, but subject to the credit risk which is available, I think the risk-reward opportunity is still in favor of fixed income investors. I just want to add one more point on China. Our trade deficit with China is $51 billion. If we include some hawala payments, probably it's $55 or $60 billion. That's almost equivalent to the cost of China's investment in China-Pakistan economic corridor. Now, if I simplify things, Pakistan is, you know, kind of acting as a vessel of China by virtue of that $60 billion investment, and we Indians are financing that. Instead of giving it to China, if we give to Pakistan, then probably we'll have peace in our neighborhood. That's the kind of deficit which we are running with China, and we need to develop and deepen our manufacturing sector so that we can reduce that deficit. Otherwise, that number is fairly large. The electronic imports from China will probably cross oil imports. That's too much of a, you know, value to be given to Chinese.
A very good. You know, I recently saw the debate on Pakistan television as well, where I think Nisar Hussain, or I'm forgetting the name, I think he made a similar point that, you know, from Pakistan's point of view as well, it's better to get into, you know, maybe some more trades with India. So I take your point. But let's get back to equities. Naren, you know, last year you sort of stuck your neck out and said that this year is going to be about telecom, and you had a big bet on telecom. And that's played out phenomenally. Bharti has doubled from that price. Are you still sticking with that call now on telecom?
Our view on telecom is if you have a long-term view, it's too important product segment, because we are much more dependent on telecom than we were 3 years back or 5 years back or 10 years back. So if you look at the near term, clearly some of the pessimism is completely gone. And now it is clear who the successful people are and who are going to stay. So I think part of that has got factored. When I take 3 to 5 year view, I do see a lot of scope, because end of the day, it's the most important product that any person has at this point of time. As I keep telling people, most of the time I don't know whether I have the purse in my pocket, but I know that I have my mobile phone with me.
Yeah, and that's the point you had also made at the Stone conference, right, Navneet? So you also share that view, right?
Okay, but you know, we have to take a break at this juncture. But really, that is where we are going to start the next segment. One idea as to the best sector that you think will be the sunrise sector in 2018? That question to our staff fund managers in a minute after this break.